Someone wants to know what happens if I move to Puerto Rico and can I pay zero federal income taxes if I do?
You can, yes. So this goes back to originally it was called Act 20 and Act 22, and then they passed a new version called Act 60. So Puerto Rico is a federal territory, it's not a US state. And under the rules thereof, people in Puerto Rico who earn money in Puerto Rico do not pay federal income taxes. They pay Puerto Rico taxes, which is worse. Puerto Rico taxes are higher than federal taxes. However, in order to incentivize investment into Puerto Rico, they passed these laws. Again, originally Act 20, then Act 22, and then Act 60. And what that is that if you set up shop in Puerto Rico with a company that provides services to US domestic companies, so the US domestic company does pay federal tax, or its owners do if it's a flow through, then the income from the US domestic entity flowing through into the Puerto Rican entity is not taxed in Puerto Rico. So it's not taxed federally and it's not taxed in Puerto Rico. So pretty close to tax free. And then the general strategy is that the owner of that company in Puerto Rico will then take a dividend from that Puerto Rican entity and pay a 4% capital gains tax there in Puerto Rico. So that's the basic idea. So you effectively have a net 4% tax rate. Now, there are lots of conditions that go along with this strategy. So one is you got to live in Puerto Rico for at least 6 months and a day during the course of the year. And then depending on the year, they change the rules a lot around the auxiliary stuff. So like when they first started, you had to employ 3 people locally. Some years you've had to buy a house. You've had to invest like $10,000 into an approved charity. And I always wonder when I hear stuff like that, it's like, who's running that charity? Is it your local mayor down the street, who runs that charity? I don't know. That's how the basic arrangement is though. So US company customers pay Puerto Rico entity for services rendered. That's all tax free. And then the owner of that Puerto Rico company who lives in Puerto Rico for at least 6 months takes a dividend out of the company and pays 4% at that level. So that's the basic arrangement. Can be done. We've seen clients do it. I've seen clients give it up though. So we had one client who lived in Puerto Rico for a couple of years, decided between the cost of living in these areas has gone up so much because of all these Americans taking advantage of this strategy that the tax savings isn't really worth it. So he actually ended up moving back and just a regular domestic federal taxpayer now again. Other people who works really well for is people who have family in Puerto Rico. So we have one couple, husband is not Puerto Rican, wife is, and they moved to Puerto Rico. They've got small kids, grandma's in Puerto Rico, and so that situation worked out really well. And he was able to pay little to no tax. It wasn't no tax, but it was relatively little. And yeah, he saved 200 grand in taxes by doing that.
Mm.
On YouTube is asking about FREC direct indexing, product similar to Wealthfront direct indexing. So it's direct indexing is that product of buying those stocks directly rather than through an ETF or a mutual fund. I don't think the Wealthfront has the tax loss harvesting aspect to it.